Cool. All right, I think we're live. Sweet. So, getting things going here. We've got a good day in semis. Micron is up. Intel's up after a massive run. SanDisk has been insane. We're now past 1,000 US dollars for SanDisk. EWY is up. And that's a lotly driven because I think SK Hynix basically broke an all-time high. If we check this out, almost 3 million Korean won. We're up like 50% on Hynix alone, which is mind-blowing. The rest of the semis not so well. Western Digital, ASML, Vertiv, AMD, Light really got hammered today, and a lot of the seems like data centers as well, with like CoreWeave, Nebius, and Oracle kind of getting clubbed as well. So kind of like dispersion of returns today, but hey, that's the markets. Cool. Let's see what's happening. So Tomly holds a bunch of Ethereum. Cool. Micron is at 526. Let's go. Okay. Poet down over 40% because Marvel canceled all purchase orders. That is insane. That is gonna hurt anyone holding that. I don't really fully know what this is about, but I always believe like you need to invest in management teams that you trust. That is extremely critical. Cool. So what did Dumbass do? He violated the NDA and went public with the contract himself. Now he's ruined the company. Yeah. Wouldn't want to touch this company. Okay, so this guy Marcos, he does these really interesting things around like calls his like HBM matrix or whatever around like how do you think about the supply, and I think it's worth diving deep into here because I really like his framework and the way that he thinks. So let's talk about this. Forward PEs and semiconductors. It's something that people are typically very terrified of because they're just like, oh, like what if semis come crashing down, blah, blah, blah. It's something that I hear a lot of. It's something that people are it honestly is so full of shit. Like, so let's look at this. In my opinion, long-term agreements matter less and less and more in the governing weight they bring in the structure. So with one-year deals, you lock in forward one or two, you bring forward 1 or 2 quarters. 5-year deals lock in allocation, status, and roadmap commitments. So cool. Now, the structural thesis is real. I don't like forward PEs and metrics, but there's no anchor for what the right multiple should be. Is it 12, 18, 25, 147? You can say higher than now, but you cannot defend a specific number. Roughly agree. Price to book, cool. So he says, what I use in my own HPM research is enterprise value to mid-cycle operating profit. Okay, this is pretty crazy. Let's see what he's on. Instead of asking what the company earns next year, what its assets are worth on paper, you ask what the business earns in a normal year once the contracted architecture is fully running. Then you can compare market value to that. The number means it's something concrete, enterprise value per dollar of normalized operating profit. So what is mid-cycle OP, and how do you determine it? Mid-cycle means a representative through cycle year, somewhere in 2020 to 2030. So what he's saying is like, okay, let's figure out like how much money this company is going to earn by mid-cycle and then extrapolate forward. You build a floor, a central, a ceiling, cool. And you apply a haircut, so you be conservative. So entry is easy, exit is hard. Okay, but how has he actually determined the mid-cycle? I mean, doesn't seem to say. Let's ask him. So what do you think mid-cycle actually is here in term mid-cycle operating profits actually are here for these memory companies. Cool. Hopefully we get an answer to that. But yeah, like a lot of Samsung, Hynix, Micron, the major memory manufacturers, they've signed 3 to 5 year deals. Like to me, it feels like memory is structurally sold out till 2028, 2030, 2030, not 2020. Cool. Let's go back to the doom scroll. Okay, UiPath, Databricks. orchestrate agents, whatever. Don't really find that interesting. Okay, Arcturus provides network on chip IP for complex SoCs and chiplets occupying it. Okay, I actually don't know what this is, so let's go to Claude. Oh, whoops. Explain to me like I'm 5, 25, and a semiconductor enthusiast. Let's just let this do it because you'll still get it in context. All right, no, let's not doom scroll in the meantime. Okay. Oh, this is kind of bad. Okay, so the Artemis sells IP, not physical chips, so the blueprints of how data moves around inside complex chips. Okay, so they license chips, but what type? Okay, so they own network on chip interconnect layer, the most architecturally sticky piece of IP inside a complex SoC. So, few questions. What is SoC, NOC, etc.? Then what else do we get? What do you mean network on chip? I don't know what that means. Why are these chips important? Look at my typing. Why are these chips important? Cool. So system on chip. Cool. So in the old days, a computer has separate chip for different jobs, one for processing, one for graphics, one for memory, blah, blah, blah. And SoC combines all of that. So a network on chip. The CPU needs to speak to the GPU, etc. So network on chip solve this by putting the networking on the chip. Okay, so literally, that's interesting. So you're putting the networking components on the chip. So why does that matter? So a lot for autonomous vehicles. Okay, so it improves latency for things like autonomous vehicle, smart home. So it seems like a more edge-based thing where rather than having your data going to one point, then going to every component, you actually can get it directly to that component itself. So somewhat niche in my view. Like I don't really see why large data centers would need that, but let's understand what he's trying to say here. So they've got a big backlog. They've reached positive cash flow. I kind of don't like these AI generated graphics, to be honest. It feels like I'm reading slop. But let's see what the stock is looking like. Is there anything here, or are we way too late? Because that's the other thing I feel like you have to be conscious of is like, are people, like, is this thing structurally overvalued? Or people are like, oh, this is the next bottleneck, we have to get it now. And then you're paying some crazy price for this shit. So year to date, 70%, 200, okay, so it's run up. EPS negative 0.82. Okay, let's say it gets to positive at $1. The stock is 26. So, okay, like this isn't necessarily insane. Let's look at what the EPS is looking like. EPS, where are you? Okay, I'm getting a little lazy. Let's go forward. EPS. What's the ticker? I think it's ART, AIP. What is measured? Okay. So by 2027, the whole financial year, they're going to make 4 cents. Yeah, see, I just find that hard to get around. Like, if it's like $1 or $2 for financial year 27, I'm like, cool, that's better. But we're still looking at cents in the dollar. I would rather just wait to buy something like this. So for me, like, this doesn't fit my structural thesis. Like, doesn't fit my structural framework for why I would invest in this semiconductor company. Cool. Nebius investor. So I don't own. I'm not bullish enough, let's say. So let's read the bull case for why I should be bullish on Nebius. Cool. Nebius to $1 trillion by 2030. let's start at the beginning. Okay, this is going to be a fun read. Let's buckle up. So, for context, Nebius is basically a neo cloud. Think of them as like the new AWS or whatever, but for GPU workloads. So Nebius is the best single risk reward. I actually don't agree with this premise to begin with, but let's see. I'm never say never. Okay. So blah 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 blah. Yandex. Okay. So I think this is really critical. I think the Nebius team is extremely strong and like definitely worth not you shouldn't be fading them. So Yandex was founded in 1997 as a search engine built for the Russian market, let's say. And the thing about this is it forces a team like coming from like an engineering background. When you have like hundreds of millions of users, you have to be technically good. Like you're not allowed to be bad. Yeah, Larry Page and Sergey even tried to buy Yandex for 130 million back in 2003. That is insane. When they IPO, they raised 1.3 billion, and at the peak of 2021, they had a market cap of 31 billion. Now, Volaz is not a founder who sells. He's a founder who builds. So I'm guessing that's a founder. So let's just quickly pull up Yandex management team. Get that going. So 13,000 employees. So Pavel, that's the main guy. Maybe there's a different name for him. Let's go to the actual site. Okay, cool. So we've got Gregory, who's the CEO, Alexander, who's the COO, Ivan, who's the CTO, and Maxim is the CFO. Cool. So I don't know who he's speaking about, but anyways, let's move on. So Yandex operated under a different constraint. That's access to capital. And they produce some foundational machine learning technology. So MatrixNet in 2009, foundation for large-scale ranking, makes sense. The fact this is adopted by CERN is insane. CAPUS, native GPU accelerated categorical feature handling, open source ML framework, still considered a gold thing. Used by cloud. I actually don't know these. I'm not necessarily that deep in, but like fundamentally, this team knows how to ship very challenging engineering things, right? Like, I think they didn't pivot to AI. They literally defined the previous decade. And like the other thing is are the people behind ClickHouse. ClickHouse is one of the best databases available on the market right now. Like for RouteMesh, my startup, we use ClickHouse, and it is a phenomenal piece of technology. So like, I don't even have to like necessarily trust on this like inferred credentialism. I know these guys are really good. Cool. So blah, blah, blah. Everyone can buy GPUs, but how efficiently design, orchestrate, squeeze performance? These guys are definitely the people for it. Okay, so let's move on. Yandex Cloud. So in 2021, revenue hit 3 billion rubles. It's so annoying when you get these different currencies. I'm pretty sure that's rubles, but rubles are like worth not a lot now if we see down bad. So I guess this used to be worth a bit of money, but let's move on. In 2022, they reached 3.2. This is okay. What is he trying to say here? So he's saying that okay, let's move on. A 55-45 split between infrastructure as a service and platform as a service means Yandex Cloud wasn't just renting compute. They're performing higher value add services. Okay. So what he's really trying to say here is that like because of their deep experience with technology and software specifically, they can fuse the hardware and the software to create a valuable company. Okay. So Yandex Cloud was built with the fail-static autonomous data plane that ensures outage is minimal based on their own experience building a large-scale search engine. Cool. To build supercomputers. Cool. So let's move to 2022. Basically, it was a Dutch domiciled NASDAQ company, and they got trapped in sanctions. And effectively, in 2024, this mess kind of closed. They sold their Russian operations enough to achieve a clean break. They have a data center in Finland, some international subsidiaries, and about $2.5 billion in cash and 1,300 engineers. So these guys really went through the ringer. Now, the 1,300 engineers, these are kind of like the messiahs, I guess, that decided to follow the CEO or founder, I don't know, into the abyss. And one of them was the guy who developed the supercomputer, who's the architect of their core developer infrastructure. Okay, this just sounds like AI when people are like, Nebius didn't hire a team, they inherited blah. Like, I can just tell this is like AI generated, so we're going to skip through a bit. Okay, so the main takeaway from all of this is like a bunch of smart people built a bunch of like good technology for the past decade and have brought that into their operational experiences with Nebius, had to go through a bunch of challenges. Cool, that was part one. Let's move to the actual cases where we actually started here. So Nebius at 40. So Nebius is about 150, 160. Yeah, 144. It dipped pretty hard during the recent war antics. So yeah, went as low as 90, currently at 144. So nice little rebound like everything else in semis. But let's move on. So my investment count is up 17. Cool. Okay, can you tell us why we should care about this? Okay, AWS GCP, Azure, ARR, net dollar revenue retention, growth, long-term profitability. So ARR, typically businesses lose 30-70% of their customers, but they have a net dollar retention of 120%. So cool, it means their product is like sticky, and that is traditionally true. Like when you as a technical team deploy your software on a set of infrastructure, you can't just like move away from it. It's like, if you're small, it's 3 months, but it can very easily be a multi-year, I guess, operation, shall we say. So net dollar revenue retention, the AI wrapper startups. Yeah, these AI wrapper startups are complete shit. Like anyone who's in Silicon Valley and is a venture capitalist, I kind of think they're a little dumb. Because the stuff they're investing in is so shaky. But when you're investing like infrastructure like this, it is like rock solid. Anyways, blah, blah, blah. Okay, growth. And profitability. So where are the numbers? That's what I'm trying to find here. Okay, so he's saying they want for more than 5 gigawatts of NVIDIA-based chips. Cool. See, it's not just revenue, it's annualized recurring. Like, I can tell a lot of this is AI. So our job is to like flick through and really figure out like what is important here. This is an OpenAI chart. It's not relevant. Blah, blah, blah. Okay, so he's trying to figure out like how much money can you earn per megawatt. So he's saying $10 to $15 per megawatt, but $25 per megawatt is insane. I would personally anchor around 20, let's say. I actually don't know my numbers per megawatt, but like I do know compute is bullish, but let's not be ultra bullish. So let's say 20. Demand will outgrow physical supply. 100% agree. No questions about that. Like the demand for compute is literally infinite. And if you don't believe that, like you should probably stop watching. Anyway, NVIDIA chips will become more efficient. Yup, 2 to 3 in the next 10 years. That's structurally true. The new GB300 chips are like 75% more efficient while giving like 2x more compute. So I know NVIDIA is pushing on power efficiency. And the thing is like we're hitting an upper bound of like how much power these data centers can actually draw. So yeah, I structurally agree. Value-based pricing, cool, law pricing firm. Okay, I get the analogies. Show me the case. Okay, so they've got 5 gigawatts of capacity, $20 a megawatt. Do some simple math. 100 billion, 10 times ARR, a trillion. I don't know. This feels structurally a little lazy. Like, okay, let's say they do get to 5 gigawatts and you are using 20 million. Okay, so your 2030 ARR is 100 billion, and you say times 10, that's a trillion. Okay, but what are margins on that? Let's say, look, this doesn't feel perfectly clean because like how much compute you can get online can differ massively. So big asterisks here. I would say like by 2030 they get like say 2.5 gigawatts. So let's say 2030 ARR is actually 50 billion and you go 10x. Okay, so ARR is 50 billion and let's assume margins are 50%. I don't know. I'm just kind of guessing here, but let's say margins. So let's say they make $25 billion by 2030. Times 10, that's 250. So I would actually say the estimate is like maybe 250 billion for what the market cap could be by 2030. Now let's look at what their market cap is now. Okay, 36 billion. Like, that's interesting. Like, even 250 divided by 36, you're looking at a potential 7x. Like, doing very basic math, but that actually checks out. I'm like, okay, he's of course bullish because, and that's like literally the whole point of this article of why Nebius could be worth $1 trillion. But I actually like this. Like, I think the revenue per megawatt, let's just double check this real quick. Be like, does the dollar amount per megawatt seem correct in your view? Yeah, like megawatt per dollar is like a very interesting one because it depends on electricity price, what price you pay for hardware, etc. So let's kind of see what I call it Sky God says about this. Scrutinizing benchmarks. By the way, this is like one of the ways you definitely should use AI when looking at investing. Using it for research on like, should I buy this or not? Okay, so $10 per megawatt is where we're at today. 20, he says, is aggressive. Now he says they say historically compute prices tend to fall over time. I actually disagree with this assumption. Compute prices tend to increase over time based on the way we've seen H100 prices rise. So I don't agree with what Claude is saying here. Like, if you look at H100 rental prices have literally gone up. Like, I can show you H100 rental prices. Cool. As of April, where is it? Over time. I'm being a little lazy here, but yeah, like where's the multi-year graph? Yeah, 2021, and this goes to, no, is that Q? Yeah, no, that is Q1. Hold on. Let's see. Silicon Data launches opaque prices. So there is, I think, the rental price index, this one right here. Oh, come on. Anyway, okay, here we go. In May 2021, it was about $2.30 to rent an H100, and if you look forward to 2020, wait, no, this is 25th. Sorry, this data isn't correct. But trust me when I say that rental prices have actually gone up, not gone down. So going back to this one right here, the valuation case for Nebius. So let's say we price like $15 per megawatt and they get 2.5 gigawatts online by 2030. I'm kind of being a bit bearish here, but I do believe land with power is going to be a massive constraint that most people aren't really thinking of properly. So let's say $37 billion of revenue by 2030. Now, the bit I'm trying to figure out is like, what is the margins on this? Like, what are their margins today? Margins Nebius. And it depends how they finance that and what's the interest rate on that. So, okay, margins are negative, but that's because of the capex. But okay, 40%. But like, honestly, if you're in NeoCloud, like your end tenants, because they're renting compute from you, like 40, 50%, like I do think isn't an insane thing. Like, you could honestly be as high as 70, but like we want to be worst case modeling here. So let's say $15 per a megawatt and 2.5 gigawatts comes online. That's $37 billion, and let's say a 50% margin. So like, say $18 billion of earnings by 2030. And then you apply a 10x multiple, 180 billion. So yeah, like I think the base case is there is upside with Nebius. Now let's look at financing dilution. So in Q1, they made 55 in revenue, with net income of negative 113. and by December 25, it looks like it's about 200. So they 4x just in like 4 quarters till December 25. Customer prepayments. So customers are prepaying in advance. I think that's like a really cool thing, that their capex is being financed by their customers directly. Convertible debt. They upsize some debt, and it's secured against the contract and related infrastructure. Sounds like they're kind of like using GPUs as collateral, to be seen. NVIDIA is an investor. Cool. Arcadi is, yeah, I mean, Jensen Daddy's behind this one, so honestly, like, it can't fail. Like, I think the new too big to fail is really like, has NVIDIA put money inside you? But at the same time, and I'm not saying Nebius is a favorite, it is in NVIDIA's best interest to spread their chips around the chessboard as much as possible to ensure NVIDIA chip dominance and basically CUDA software dominance. So current valuation 37, target valuation $1 trillion. I think it's like maybe 200, 300 billion. But anyway, blah, 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 14x, possibly. Cool. The rest of this doesn't really matter. But to be fair, I think the case for Nebius is here. I need to look deeper into CoreWeave because that's like the most similar comparable. And technically, according to SemiAnalysis, they say CoreWeave is a better NeoCloud than Nebius. But maybe we can look into that tomorrow. Cool. The world's most respected engineering body, IEEE, just validated the HBM thesis. So the first memory company to win the award in 40 years is very cool. Wow. Okay. I don't know. This guy's like very bullish. So let's just like double check this. I actually don't know how important or how much of a big deal this is. So let's ask Claude, is this a big deal or is he overly bullish? Yeah, it's like, it's easy to just get swept away by things like this and be like, oh wow, this is like, they won this thing, but who knows, maybe it's a participation trophy. Okay. The IEEE Corporate Innovation Award has been given since 1986, and it's the first time Hynix has received it. Okay. They hit a 72% operating margin. Cool. Is the IEEE award is a lagging recognition of innovation. They did something great. Okay, cool. Blah, blah, blah. I ignore everything that AI says about demand softening. It like doesn't know shit. Cool. All right. They won an award. So, Qualcomm, Apple, OpenAI. Don't really find that stuff too interesting. GPT 5.5, whatever. Who cares about that? Okay, Meta agreed to buy up to 1 gigawatt of space-powered solar from Overview Energy for its AI data centers. That's interesting. Okay, so I think the whole space theme isn't hype. Like, I think it's structurally real. But I don't know who Overview Energy is and why they matter. So I would be keen to dig in a little deeper there. Space energy for Earth, cool. Satellites that beam solar energy. Oh, I think these are the guys who like have solar panels that reflect light from how it works literally. Okay, cool. Literally redirect sunlight. I think it's a really cool thing. I don't know what the commercials look like, but the fact they're building for gigawatt scale tells me they're probably thinking about this stuff correctly. Cool. I would probably need to spend more time here properly understanding it, but maybe that can be a backlog for next thing. I would want to figure out like how do you get into the private market valuation for this, because I think this is kind of stuff that like even if venture capitalists get a bit too excited about this stuff, like it's still worth a bet, and a lot of VCs are still looking at like pure AI plays. So if you had access to this in private markets, I think it might not be a bad bet. The question is, can they actually deliver the gigawatt or not? That is what's really going to be interesting. Okay. Uh, wow. Singapore is number one in the world for AI usage. So that is insane. Okay, what's this Anthropic Economic Index? Indonesia's 95. Well, honestly, that checks out. Like, having visited both countries, like Singapore is insanely advanced. The rest of Southeast Asia kind of feels like the poor cousins of Singapore. In fact, they did in 50 years is phenomenal. But let's quickly check out this Anthropic Economic Index. Anthropic Economic Index. Cool. Understanding AI's effects, March 24th. So this is about a month old now, more or less. Okay, AI effects on the economy, loading data. I kind of do like how Anthropic does these cute little things. They need to get more compute, but hey, I like the cute things they do like this. It's kind of like very like AI friendly, normie friendly. Okay, U.S. usage. So leading top 20%. Washington, Oregon, California. That's 18.45. Wonder what something like New York is. 9.2%. Oh wow, that is interesting. It's actually quite low, and I think what's interesting is where people want to build. Wait, Texas is 8%. It's like where people want to build data centers. It's almost like these are the worst places because that's where AI isn't used the most and probably like feared the most. So it's almost like if I was like building data centers, I would be like, how do I find the cheapest dollar per megawatt effectively on the most greenest squares on this thing? But let's look at global usage. Okay, so Australia 1.59, the US 22. That is staggering. New Zealand, that's where I'm from. 0.2%, 7%. And honestly, like this checks out. Like from my anecdotal experience of like I travel a decent amount. This checks out. India 6%. Cool. But I think they're adjusting it based on like an index, probably by population or something. But I mean, yeah, you're looking at as normal, your first world countries leading the pack. Wonder where Singapore shows up in this. I don't know. Okay, anyway. Cool. So it's all coding, education, arts, management, office. Cool. Anyway, let's move on. But I think that's pretty cool knowing that you can like actually see stats for countries' usage. Okay. I didn't realize, so Jucon's really good. Sometimes he has like some stuff that is a little off, but whatever. So I didn't realize this before. I naturally assumed Intel would have a supply advantage over AMD and CPUs, but Qualcomm and MediaTek apparently cut their TSMC 4/5 nanometer orders because mid to low end smartphone shipments literally collapsed. AMD seems to have taken over that capacity. Okay, so I think this is like something really important to understand. Everyone's like, oh, like Google's gonna make chips, so and so is gonna make chips, like Intel CPU, NVIDIA CPUs, whatever. It's like none of that shit matters. It all matters like who actually has TSMC capacity. And by the way, NVIDIA owns TSMC. Like Jensen and Morris Chang, the founder of like TSMC, those guys like have been like buddies for like literally fucking decades. So the fact that AMD has more TSMC capacity, I think, is like a very telling sign. Now let's just pull up the charts for a second. You've got AMD right here. Price to earnings 115. Okay, and Intel I think is like something disgusting. Okay, you don't even get it, but structurally, like, okay, I do think AMD is still expensive relative to NVIDIA. Like they have, I think, almost twice the peak or 3 times the P of NVIDIA, and they're like literally number 2. Like, yes, CPUs are important for orchestrating agentic workloads, but I don't think they're more important than GPUs. So I feel like the market has really run ahead of itself. But if you're debating between Intel and AMD, I think you have to realize, like, when you're buying Intel, you're buying a story. When you're buying AMD, you're literally buying people who have TSMC capacity. I like that. Dun dun dun. Okay. Moving on. SanDisk. Okay. Let's check this out. So, Morgan Stanley estimates, they say quarter-on-quarter change. So for the second quarter, so SanDisk earnings come out in about 3 days. And the fact that the quarter-on-quarter change, the consensus is 36%, but Morgan Stanley expects 65%. My hot take is that SanDisk is still cheap. And I know that sounds almost insane, because the chart looks a little something like up 3,000% in a year and 300% on the year alone. But if NAND growth is as high as we see it being in the next like 3 days when earnings come out, I'm like gonna figure out like how do I put more of my net worth. Kioxia is another very interesting buy as well. So I actually don't have exposure here. It's something I probably should change. Because so it's Thailand depository, interesting. Okay, they're up 75% of the month. But this isn't the right chart I'm after. Come on. Yeah, this is the Taiwan Stock Exchange. Cool. So year to date, it's up 200%. So they actually manufacture the NAND. Like Kioxia and SanDisk share the thing. It's kind of like the back end. I hate saying this, but like, and it may not even be fully factually correct, so double check me on this one. But like Kioxia is kind of like the back end of SanDisk. Like, it trades at like very similar, what do you call it? Scale of SanDisk. So, I'm not sure how much upside there is relative to SanDisk, but something to look out for. And basically, I think the story here is like, is NAND growth going to be bigger than DRAM? Because if it is, SanDisk has only just gotten started. I know that sounds insane, but I'm still a buyer at these prices. Like, virtually all the stuff is really cheap. You just have to make sure you're not buying something overpriced that won't make a lot of money, aka Intel. Anyway, I have not had breakfast, or I did, but getting a little hungry, so gonna call it here. Thanks a lot for tuning in. Gonna be like roughly around this like 9:30-ish time every day, and really just speaking about semiconductors. So if you enjoyed, let me know what you liked or you'd like to see more of. But yeah, thanks for tuning in.